Hey, good day, everyone. Rich Griswold from Griswold Capital Strategies. And with tax season behind us, wanted to revisit one of the most frequently asked questions that came up this last tax season, and that was, why is my refund so much smaller than years past? Or even worse, why do I owe money when I haven't owed money in years past? And much of that can be attributed to you having less federal income tax withheld from your paychecks. That was part of the new tax laws that were fully implemented in 2018, where the federal income tax withholding tables were actually adjusted. So you had less federal income tax withheld, probably bigger paychecks, should have been. But unfortunately, at tax time, that had to be reconciled on your tax returns. So that answers that question as to why your refund was smaller or why you owed money. And with that said, here we are at the end of May 2019. And if you haven't made any adjustments and you expect your tax situation to look similar to 2018, then you're going to want to make adjustments to avoid any unpleasant surprises come tax time next year. So with that said, one way to go about this is to go to the IRS's website, irs.gov. In the search function at the top right of the website, you can type in withholding calculator, and that'll actually take you to a link to a withholding calculator. How about that? And then you go there, answer a series of questions. It'll make a recommendation as to what your W-4 should look like based on the answers to those questions. You can then fill out a new W-4, sign it, submit it to your employer. They'll make the appropriate adjustments. Now, another alternative you have, and there's a little bit of a retirement planning kicker to this. So you're getting a twofer on this one. This is kind of a tax planning / retirement planning strategy. And this is with regards to your retirement plan that you contribute to at work. Now, in years past, you only had the traditional 401k plan to contribute to. With the traditional 401k, as you're most likely aware of, is that is contributed to with pre-tax money. So you have your gross paycheck, you have a percentage of that that's going to your 401k, the balance of that paycheck is then taxed, and then you get what's left over. Well, what's gained a lot in popularity over the years, especially more recent years, as more and more employers offer this option, is the Roth 401k. So with a Roth 401k, it's after-tax money. So you have your gross paycheck, it gets taxed, money set aside to the Roth 401k, and then you get, of course, the balance left over that. Fast forward to retirement, traditional 401k, you roll over to a traditional IRA, you draw money out of that, it's taxable. Roth 401k, in retirement, you roll it to a Roth IRA, you draw money out of that, that's tax-free. Think about it for 1 second. Fast forward 10, 20, 30 years from now, you're in retirement, and think about how much leverage you have in your tax bracket planning, your tax bracket management, when you have these different buckets of money you can pick from. A taxable bucket, a tax-free bucket. You're probably going to have some additional sources of income, Social Security, a pension, other investment accounts, what have you. But you've got so much leverage there as to how you plan retirement every year as far as your income and in managing your tax brackets. So something to be said about that. Now come back to the present, 2019, and let's just say, for the sake of argument, you've got, we're talking about $10,000, and I saw in many cases where people were just solely contributing to a Roth 401k, like every dime that they're contributing is going right to a Roth 401k. But stick with me here. Imagine, again, just for the sake of keeping the numbers nice and round and easy, you were to contribute $10,000 to a traditional 401k in 2019. You're in a 24% tax bracket, which is right about in the middle. You're looking at about a $2,400 savings to your tax bill in 2019. And that's not even including the potential state income tax savings that you have. So depending on which state you're in, there's potentially more savings there. And that's just food for thought in the present here. Happy to talk to you about this in more detail. I know it's a lot to kind of take in 5 minutes, but always happy to chat in more detail and strategize with you. You can reach me directly at 805-603-2992. Again, 805 603-2992. You can also go to my website that has all of my contact information there, including my email. Website is griswoldcapital.net. And with that said, look forward to coming to you with a lot more of these video blogs or vlogs on various topics going forward. With that said, I do have a short compliance disclosure I do have to read off. And with that said, I do wish you a wonderful day. Information contained in this vlog is for informational purposes only and is not meant to construe any specific tax or investment advice. Any tax-related information discussed in this vlog made by Rich Griswold is done in his capacity as an enrolled agent and not as a registered investment advisor. Investment advisory services offered through Regal Investment Advisors, LLC, an SEC-registered investment advisor. Griswold Capital is independent of Regal Investment Advisors. Regal Investment Advisors, LLC is not a law firm or an accounting firm.